Ladies and gentlemen, there's a lot going on. Donald Trump just changed his Twitter bio. The golden age of America begins right now. Donald Trump also dropped his latest fragrances, Victory 45 and 47. Yes, the leader of the free world just dropped his latest exclusive fragrances. It's all about winning and victory. Elon Musk is starting a third political party. Jerome Powell is about to be unemployed. Retail investors are outperforming institutional investors. You're all welcome, by the way. Brokies are paying $1,000 per month on car payments, and Figma is about to go public. Could this be the next 10x? We've got a lot to talk about, guys. Let's roll the tape. Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks were mixed on Tuesday as President Trump's massive budget bill passed in the Senate and Wall Street watched for progress on trade talks. And guys, today, the S&P 500 was flat, but market breadth was incredible. And that's because selling was largely in some of the large names in each sector. For example, GE, Raytheon in industrials, Meta, Netflix, Google. These were down in the communications sector. Tesla fell 5%, and then Nvidia and AVGO for the tech space was down about 3% each. Microsoft was down 1% as well. Other than that, it was a broadly green day across the board with every single sector gaining except for the XLC and the XLK communications and technology. But because of the weights of these two sectors right here containing most of the Magnificent 7 names, the S&P 500 was actually pretty much flat on the day. So it really goes to show the importance that these sectors perform. Technology has outperformed, and I think what we're going to see over the next couple of days, particularly in the month of June, is a bit of a rotation trade, a rotation out of tech into the broader market, stuff like financials, utilities, industrials, energy, materials, healthcare, staples, which were very, very bullish today, guys. Look at that. Materials up 2.59%, healthcare up 1.43%, staples up 1.25%, with even gold performing relatively well, up 0.89%. Now, this is a much better way to view the market as a whole. You can see that large cap growth really took it on the chin today, down 1.82%. And then just growth as a whole was just generally down in the mid cap space, in the small cap space. But value and core outperformed in smalls, value and core outperformed in mid caps. And we actually did see pretty good performance in the large cap space of value and core. And I do expect this rotation trade to continue, where we'll see rotation from these larger names into the smaller names, into the other components of the market. But that's not to say that this isn't going to perform. We're just going to see a little bit of a rotation. And this rotation is largely driven by Trump's big, beautiful bill, the tax bill. The truth of the matter is, while this wasn't in the phase of being passed, there was a lot of uncertainty if it was going to pass, what's going to happen with taxes. And when we have uncertainty in the market, you're going to see the market position into safety or perceived safety. And that was the mega caps. The Senate Republican bill has officially passed the Senate. It's going back to the House now for a revote, and then it's going to go back to the Senate. They're trying to get a July 4th Independence Day deadline. Trump wants to sign it on Independence Day. Republicans have wrangled over the bill's measures overnight. However, they've come to an agreement, and it does look like this is going to be the official bill. It's going to pass through the reconciliation progress. And at the end of the day, guys, the truth of the matter is this bill, if you are rich, you're going to get a tax break. If you're in the upper and top 20%, you're going to do very, very well. If you're in the middle or lower classes of society, you're not going to do very, very well. And that's because they're cutting spending here in Medicare and welfare, and they're giving massive tax breaks to the rich. So this is why it's best to be in the upper and top 20%. You get rich, you get tax breaks. That's how the system works. Why is that the case? Because politicians are rich too. And so this budget bill is more uncertainty that's officially becoming certainty. The market can now officially start pricing a lot of these changes in, and that's what we should see. And that's actually what we saw today, particularly with that rotation trade. You saw the market going into sectors that's really going to benefit from this new and revised budget bill. What also helped the market momentum today was just some of the economic data, guys. We got the latest jobs opening data, and it shows little signs of the labor market weakening. Jobs opening came in at 7.77 million. The consensus was for 7.3 million, and rising jobs indicates a growing demand for labor signaling economic expansion and increased opportunities for employment. The ISM manufacturing numbers, look at the PMIs right here, also came in slightly better than expected, 49 versus 48.8. Very, very solid stuff. We also had some very bullish comments from Fed Jerome Powell, the most notable being that he came out and said that the US economy is actually pretty stable and on good footing. And when you have all these things come together, you're going to get a day where you just see market breadth expand. And even though the S&P 500 wasn't up, average stock did really, really well today. Now, looking at some market movers, Tesla was down 5%, and that's because Trump and Musk are going back and forth. Trump even floated possibly deporting Elon Musk, which is crazy. He's not going to get deported, but they're going back and forth. Elon doesn't like this budget bill. Trump threatening to cut Elon Musk's government subsidies. And as a result, Tesla stock is going to be down 5%. Apple was up 1.91%, bucking the mega cap trend. And that was on a report that the iPhone maker is considering using Anthropic or OpenAI to power its Siri services. The market loves to see that type of news. And then Evolution AB and Hasbro signed an exclusive multi-year online live casino and slots partnership agreement. The stock was up 1% as a result. It means they'll be able to reinforce their IP competitive advantage and use the monopoly namesake, which they have used for the last couple of years and has been one of their most successful games to date. And then guys, something we're going to talk about today as well is Figma. Figma is about to go public under the ticker symbol FIG or FIG. The S1 was just filed, and what's really, really interesting is that they have $17 million worth of Bitcoin on their balance sheet, and the management team has also approved another $30 million for Bitcoin purchases between now and whenever. We're going to talk about this on my second channel extensively. We're going to talk about, is Figma a buy? Because Circle stock has 10x since its IPO. Can Figma do the same? That's what we're going to talk about. So go ahead, like and subscribe. Follow me on my second YouTube channel. I'm going to leave it in the comments below, FinFluential Media. Go ahead, follow me then. We're going to talk about Figma. That video will be up 30 to 45 minutes after the upload of this one. And then for everything we saw today, there were 4,100 advances, 2,200 decliners, great breadth across the board. There was outflows from the Nasdaq 100 to be expected, inflows in the New York Stock Exchange, with the S&P 500 virtually flat today. And guys, we officially did it. Market breadth has officially captured the 150 and 200 day. We're above the 50% mark. Things looking really, really solid. This is the type of momentum you love to see. And as these go higher, so too will the market. Now guys, diving into the charts, and you can obviously see the movement here in the markets. Look at the IWM, look at the RSP, look at mid caps, look at small caps, all up in excess of 1%, with the mega caps, the Nasdaq 100 and the S&P 500 down today, with the S&P 500 kind of flat, but the Nasdaq 100 really taking it on the chin. So it really goes to show the market we saw today, definitely a rotation happening under the hood. And I mean, we just saw a rotation out of everything that's performed really, really well so far this year. For example, European stocks are down. Same with Israeli stocks, Middle Eastern stocks. And then again, we just saw a rotation into mid caps, into small caps. China stocks were kind of flat today, and Australian stocks, which have performed pretty well, kind of flat, but we'll see how they perform in the upcoming market open. Long story short, what wasn't performing well this year did really, really well today. And I think we're going to see that trend continue. That's actually something I mentioned yesterday and the day before that. You know, I was saying we are probably going to see a bit of a rotation. Be open-minded to small caps, be open-minded to mid caps performing really, really well. Now, we did see volatility tick up ever so slightly, and that is a result of just the S&P 500 and the Nasdaq 100 not performing that well. And we had mixed price action in the bond market. The 2-year 10-year yield were up, 30-year yield was down, the dollar falling ever so slightly, and the TLT bonds was just basically flat. Bitcoin was down 1.28%, Ethereum down 3.2%, gold was up 1%, silver was flat, and WTI was up 0.86%. So if we go ahead and look at the S&P 500, yesterday we said we are expecting a little bit of weakness here at the top end of this range, and that's exactly what we started to get here today. We are seeing a little bit of weakness. Now we can actually continue the pullback here in the short-term trading week. If we are to look for a possible level to find support, it could be the 61.12 level right here. This level right here would be a very, very good support level if you were to find a pullback, and then we could go from here and make our next move to the upside. If we do go ahead and actually break below this level right here, we would just then look to the gamma flip, which should just be the 60.28 level right here. Ultimately, I think this is where we probably will find support and make the next move higher to all-time highs. But guys, this is not bearish. When you look at the S&P 500 on the daily chart, we're at all-time highs. Very, very good stuff. You pull up the weekly chart, things looking incredibly bullish from a weekly perspective. Look at that weekly bullish engulfing candle at all-time highs. Yes, we are at the top end of the range. We can see a little bit of weakness, but this weakness should be short-lived. And eventually what we will see is strength in the large caps, in the mid caps, in the small caps, in the high beta. We're just going to see an everything rally, particularly as we get trade deals, rate cuts, and as the Senate and as the big, beautiful bill officially passes the House. And that's just another thing we can put in the rear view and look ahead to the second half of 2025 and even to 2026 as earnings revisions begin to accumulate under that new bill. This bill will increase spending, particularly for the first 3 years. It will cut spending after that. But we're going to talk about that in tomorrow's video. We're going to talk about the specifics of the big, beautiful bill. But all in all, what you have to understand in the year and now for the S&P 500, this is a shortened trading week. We probably will see a little bit of profit taken in the large caps, a little bit of rotation into the small caps, into the mid caps. So expect a little bit of more downside here for the S&P 500, possibly for the NASDAQ 100. Don't expect to just fall out of the skies, guys. It's just a little bit of weakness, completely to be expected and completely healthy. And we should see, again, a rotation into stuff like the IWM. Look at that candle, absolutely insanely volatile. When we go ahead and look at the RTY, we found resistance right here at the top end of this range. The call wall is what we call it. We found resistance right there. We pulled back. And I think this is very, very healthy momentum we're seeing right now. I think this is probably means we probably go onward and upward higher above this level right here, possibly even targeting some of these 52-week highs and near those all-time highs for the IWM. So all in all, guys, expect a little bit of weakness in the large caps for the end of this week, a little bit of strength in the broader market, and that should round out the shortened trading week. Bitcoin has not been acting too well, guys. You can see that we are putting in what you would call a lower high right here. So we put in an all-time high. We put in a lower high and another lower high in the context of forming like a low right here, a lower low, and now a lower low. So this is not looking constructive. It's sort of like we're forming a wedge right here. And ultimately what this means is that we could actually go ahead and target the bottom end of this range. But you do have to understand that constructively, we want to remain bullish because we know that M2 money supply, go ahead and check out yesterday's video. M2 money supply is showing us that Bitcoin is going to go higher, but we could possibly be seeing a little bit of intra-week, intra-month weakness, a little bit of divergence from M2. That is completely normal. So you should see a little bit of divergence right here, but ultimately the path of least resistance for Bitcoin is higher, the same as it is for stocks. Let's quickly go ahead, look at gold, guys. And we are seeing a little bit of strength right here at gold. It does look like we've made an equal low relative to this low right here and this triple top. So it does look like we probably are forming some form of like a, I guess you could say like a range right here. So we got this triple top and this low right here. Maybe we can even extend this out to like that level right there. So I think we probably will trade inside this range, and then a break above or below will determine where we go next. But even a break above these highs right here, be wary that, you know, it's still a long way to get to these all-time highs. There's still a couple of these wicks here. So this is a huge demand zone. This is a huge supply zone. And ultimately, what we're going to see is probably just range trading inside this range, looking to consolidate some of the massive gains we've made in gold over the last 18 months. Going to consolidate, and then we'll make our next move to the upside or the downside. Now, guys, a stock I said that you guys should be buying last week was Evolution AB. Had you done that, you'd be up significantly. I mean, the stock in the last 5 days has been an absolute ripper. If we go to percentage return, up 6%, right? Outperforming the S&P 500 by an absolute wide margin. And I think we're actually going to go ahead and close this $86 gap. This is after the earnings. Right now, we're sitting at about the $80 mark. You can see right there at the $80 mark. 86 is where we close that earnings gap. After the Hasbro partnership, I think the stock has a lot upside to go. And, the market's slowly but surely pricing that in. Now, guys, let's quickly go ahead, look at the dollar. Everybody is super, super bearish on the dollar. Everybody on Twitter is somewhat a consensus bear on the dollar. I'm actually bullish. Once this budget bill passes, the TGA will stop being drawn down. That's part of the reason why we're actually seeing significant dollar weakness. Once the TGA is stopped being drawn down, right, and the budget bill starts to take effect, that is when we're actually going to see a little bit of dollar strength. So even though, the consensus trade for the dollar is lower, I'm more of a contrarian here, and I think the dollar is going to see a little bit of upside, potentially to the 100, 101, maybe as high as the 104 region. So don't get too bearish on the dollar. We likely see a turnaround right here, and you always have to be contrarian in the markets, guys. Guys, and diving into sentiment, the fear and greed index continues to remain in the greed territory. We were at the 62 level just yesterday, and I said that we would push into the extreme greed zone, particularly in the first 2 weeks of the year. So expect more of the same, guys, because momentum brings momentum, especially in periods like this. And when we look at the momentum in the market, over the last quarter, it has been exceptional. The S&P 500 has notched its best quarter since 2003. The S&P 500 returned in excess of 11%, and the S&P 500 has just had a golden cross coming off the Liberation Day lows. And normally when that happens, when the S&P 500 has a golden cross, the returns we can expect 2 months or 63 days down the line is about 5.9%, just under 6%, with a 91% win rate. The pain trade for all of those that hate to see it is further upside in the S&P 500, and the fundamentals confirm this as well. When you look at S&P 500 companies with positive earnings guidance this past earnings season, it is some of the highest levels we've seen going back to early 2024. And before that, you'd have to go back to the 2021 everything money type of market. So this is extremely bullish stuff when you look at it in aggregate. And what's also confirming this momentum is the macro. When we look at Q2 US GDP nowcast gauges, all of them are above 1%, but the Fed's GDP now, which is extremely accurate, sitting at about 2.85%. That is very, very solid for the quarter. When we also look at global financial conditions, things are set to ease, and we know this is the case because we are expecting rate cuts in major economies, including the US, Australia, Britain, Europe, Canada, and the only economy that's set to see some form of tightening is Japan. But based on where their policy is right now, this is actually a good thing. Japan increasing rates will bring inflation back and earnings growth to the market as a whole. And for you as an investor, this is largely positive. Looking at data tomorrow, the only thing you really have to worry about is the ADP employment. We start getting in some of the major employment data leading up to non-farms, and we're looking for about 85,000 in the ADP private payrolls. Anywhere from 85 to 90K is what you should be looking out for. In terms of earnings, there is nothing of note. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.